Okay, what's up everyone? Welcome to another BTS video. I'll be diving into strategies I use to trade, the way I take my trades, my losses, my profits, just all round analysis on pairs, how you can be able to also use this strategy on your day-to-day trading journey. And also, this is a channel where I want to share my journey on becoming one of the biggest traders in Africa, if not in the world. You understand? So, but I just want to make sure I share my journey, document it for all you guys. So quickly moving into the chart, um, I shared some trades today. I think about six of them. The other day I was talking about not sharing that much trade, but I saw a lot of setups today, and I didn't want most of us to miss out on the setup. But I think I will strictly be sticking with three trades per day, and I won't be going more than three trades per day. So once we have three trades taken, I'll make sure I stick with that. So I won't be sending more than three trades in a day, and I'll be sending as low as one trade or no trades in a day sometimes. So quickly, Euro GBP was it our first trade? No, it wasn't our first trade. Euro AUD was our first trade for the day. So as you can see, I took it off of the supply zone, but for me as an ICT trader, it's a bearish order block zone I took it from. So, but um some smart money concepts and supply and demand concepts, they actually tally a lot. So that's why I used the two as a confluence. And I think a the problem with most traders currently is finding precision in the market, finding entries. You shouldn't be afraid to take a trade. One. Two, if you have proper risk management, then you should zero fear out of your mind. As far as you are not exposing a lot of money to the to the forex market, then you are fine. You have an account. Ideally, for me, you have a personal account. You are risking 1% of that account. You are good to go. Like, no matter how you want to trade, only a madman will be able to blow 1%, using 1% as a stop loss, and you blow your account. Or at most you are using 5%. Let's just say you are using 5%. You have $100 account. 5% is $5. You have to actually take over 20 trades, which ideally you take over 20 trades and you have over 20 losing trades. Then you need to check your strategy, you need to check the way you are entering. So, and I find it very interesting because most traders find problem with entry. I had that problem also, and with this YouTube channel, I promise you I will refine your entry, refine the way you see the market, and the way you like observe your peers. I'm more of a dollar trader. Like, I trade USD pairs strictly, but because of trying to flex my muscles, trying to understand if my concept will work in other cross pairs or exotic pairs. So I go to other pairs to check it out and see if it works, because if it works on the dollar pairs, it will also work there. So any strategy that just works for a certain group of pairs, it's not 100%. It doesn't pass the criteria of a 70% win ratio strategy for me. So quickly, supply and demand with fair value gaps and ICT concept. So right here is our supply zone, and one thing I want you guys to know is the last bullish candle at a swing high is your supply zone or your bearish order block. This is a swing high, right? The last bullish candle after the drop That's you have price rally up. You have price rally up. At this swing high, the last candle that closed bullish is your what? Supply zone or your bearish order block zone. That's what you will mark. So as you can see, I did that. I marked that out in time, waiting for price to see if we will respect that zone. Also, in a swing low, your last bullish candle, right? The last bullish candle, sorry, not the last bearish candle at a swing low is your demand or your bullish order block. So, last bearish candle, as you can see, that last bearish candle right there, the high and the low of the candle, that zone is your what? Is your demand zone. Also here, also this is your demand zone. Oh, so now you ask me, how do I now get my entries at these levels? Now, when you watch the way price moves and you see over time the way price reacts at certain levels, then it will give you a very, very good context on your entries. So one thing I want you to know is go back to your drawing board, take a lot of time to study your chart, take a lot of time to look at your 5 minutes, because your 5 minutes and your 15 minutes will give you a lot of noise and information. So you'll be able to see the way the candlesticks, they form, they open, they close. Most times I can wait on my chart for hours waiting for a setup to form. I'm waiting for that candlestick to get there. I'm waiting for it to close. I'm waiting for that 5 minutes to close. I think on one of our videos, I took a live trade on AUDJPY on previous day high and previous day low concept. That's a different concept from supply and demand. So now, right around here, if I bring this all the way, I saw price trading up, trading back up, right? Immediately I got this candle's close, right? This candle closing below all this candle, right? In this supply zone, I picked my sell right there. You can see it was on this candle's opening. I picked my sell, right? Stop loss above the demand zone, that's the swing high. We don't expect price to come back there. And as you can see, you can target a 1 to 2, a 1 to 3 risk reward ratio just like that, and you are fine. It's as simple as that. So let's say we have this level as our demand zone. As you can see, we got to that level. On the 5 minutes, we got to that level. We broke it. We didn't have any green candle that closed above. Above what? The zone. So once you don't get this type of movement, right, you know that, okay, you are either in the right side of the market, as you're selling, you are in the right side of the market, or it is not a place to enter. You need to get a solid confirmation. Let me show you something else. Let me show you another example. So this is a swing high, right? Mark that last high and low right there. The tap in and the exit. This is your entry. This candle that closed outside of this zone, that's your entry. Stop loss above the high, right? You can target a 1 to 2 right there. Take profit hit. It's as simple as that. I can't say much than all this I've said. Okay, let's say that's a demand zone, right? I want to show you off another demand zone. Now, most times if you're in a consolidation zone like this, right, you can be buying and selling from different places. buy here, sell here, buy here, sell here, and you can keep price going till you get out of price, or till price breaks a high or a low. So that's the way you can make your entries using supply and demand zone and your candlestick as your confirmation of entry. Let's dive into Euro GBP also. Euro GBP, same concept. But there's one thing I also want you to also know. So in Euro GBP, I saw something unique. We had price, we had this level of supply, right? Price reacted off of this level of supply here. We traded back down. Now, because of this supply region, I know that, okay, this demand region should be respected, because if we reacted off of this, then we should see price do something like this, right? Right. So, exactly. So, as I woke up, I saw price around here bouncing off of this high and coming into my level of demand, which, if I can zoom in right here, the last bearish candle before a swing point, before we moved to the upside. So you can see price rallied all the way to the upside. We rallied back down, right? We created a form of a resistance right here, and we came back to this demand level. So immediately we came back to this demand level, you can see my entry right there on the high of this candle, right? We got filled in there. I kind of did a mistake with my stop loss when I was entering or something, so I got tapped out. I don't know. When I'm trying to set my stop loss, I used to do that mistake. When I'm trying to drag my stop loss, sometimes my mouse slips off my hand, and then on maybe my mouse just slips around the price, so price will just hit my stop loss out. So, but as you can see, it was around there I got in here, right? Stop loss was right below this level, and this highs was my first target, because this highs had buy side liquidity. So if we want to see that high taken out, then we can now see the way price will react. Then we can now go for this level of supply. So as you can see, CPI came out, we traded up. This fair value gap was created. I wanted to see the reaction around this zone. I was telling everybody, oh, you guys can close, we already hit a 1 to 3, because CPI already gave us 30 pips off the bat. Like, we already hit 30 pips, over 35 pips, so we're already on a 1 to 3. So, but for me, I moved my surplus to break even, because I wanted to see this fair value gap hold, and as you can see, I exited off that level there. That was where I closed my trade. So this was a 1 to 5 trade that we took. So the 10 pip stop loss for a 50 pip move, which went wonderful. We just supply and demand zones. Understand one thing also: external range liquidity to an internal range imbalance, then back to an external range liquidity. That's the way price works. So right here, from this high to this low, this is a range, right? Price went for an external range liquidity. We took out a buy side liquidity. We came into an internal range imbalance. Then currently we are going for an external range liquidity, and we can go for these highs also, which is the total swing high and low of this point, right? We can target this also, which price is doing well, and we can see we are over 60 pips in profit. So, but we came out at 50 pips. So next, I think the next trade we took was crude oil. We took oil actually. I sent this oil. I actually feel I should have managed the loss on this oil by moving my stop loss to break even. But moving my stop loss to break even on this trade will contradict my plan, my trading plan, because prior before um ending of this year, like, I didn't really have like a very very good risk management and structural idea of risk management. But when I had to like sit down to do my calculations and had to put my head around risk management, I came to the conclusion that if you have your personal funds, you should be risking around 1% to 3%. If you have a prop firm, you should be risking around 0.3 to 5%. I won't lie to you. 0.3 to 5% is the best. You have a 100k account and you're risking 0.3, you are risking $300, and your daily drawdown is $5,000. You have to take over 14 trades to hit your daily drawdown loss, which in your entire mindset possible. If you are a good trader, it is not possible. But in the long run, you'll be profitable, because if you are going to be hitting a $300 risk per trade, to be making $900 on every trade. For example, that Euro GBP, if we were risking $300 for 10 pips, we obviously got 50 pips. That 50 pips is roughly around $1,500 made off the bat, which is good. Yes, there are days you can risk 2%, $2,000 to make $10,000. But what about the days you have 3 losing trades and you are risking $2,000? Are you telling me that you're going to risk and blow your account? No. So you have to do a proper risk management. So right around here, we had consolidation, and when we have consolidation in the market, we have series of orders being built. If I put my fixed price range from this high down to this swing high, you can see where we had the most build orders were here. So now this is a volume profile. It shows you where we had more volume in the market. So as you can see, this volume, we took out sell side liquidity right here. We came back up, we created a fair value gap there, we tapped into that fair value gap. I was looking out for price to go and take out this high, which is buy side liquidity, and we can get a tap, a fill into this fair value gap. That was my idea. So my initial TP was something like this, more like 80 pips would have been 1 to 2, then a 120 pips, which would have, to fill the fair value gap, would have been a 1 to 3. So my idea was more of a 1 to 3 risk reward ratio. So if we continue to see price rally and we get a 1 to 4, which would be very very good, no problem. But as you can see, price went up and came back, hit stop loss. I felt I should have managed this loss well, but in my trading plan, what I actually do is, if I don't get a 1 to 2 running profit, like a 1 to 2 risk reward running profit, I'm not moving my stop loss to break even. I'm still risking my normal capital. So let's say, for example, I enter a trade like this. For example, now I enter a trade, I'm risking 40 pips, right, for the trade. Once I'm not getting, and once I don't reach 80 pips move, right, I'm not going to move my stop loss. That was what made me not move my stop loss to break even. So if it's that we crossed this high, this 80 pip move, for me, I would have moved my stop loss to break even. But as you can see, we took out this short time high here and we sold off. So if maybe I was also on my chart and I saw this short time high and I saw the way we were rejecting off of this high, maybe I would have considered taking the trade out. But I wasn't seeing I just followed my trading plan. So, and that's my trading plan. That's where I've been trading. So maybe we can get some reaction around this demand zone. So if we get some reaction around this demand zone, then yeah, we can look out to send a signal to the group for a buy entry. Then next up, we picked USD right? USD a beautiful indication of what I was seeing in the market. So let me quickly break it down for you guys. As you can see, right around here, we have this high. FOMC broke this high. So now, supply zone broken before, which after the break is supposed to act as a demand zone. So this zone now is supposed to act as a demand zone. Now, price came back into the zone, right? And as price was rallying into the zone, we didn't get any bullish candle close above. First things first, one, we saw this crash down, created this level of imbalance. So it got broken again. This level got broken again, and in the process of breaking, we had a fair value gap was created right here. So my fair value gap was marked. Hope you can see it. This is my fair value gap right here. From this candle's low to this candle's high, this candle was the drop. So now, I was waiting for my confirmation candle right here when price was coming in. So entry is from the top of the fair value gap. But when I did not get my reaction on this fair value gap, then I decided not to enter till price got around here, and we got this engulfing candle right there. So when we got this engulfing candle, I picked my trade. My stop loss was right above here. So trade was here, 20 pips stop loss. And unfortunately, as you can see, price consolidated, came back, smashed our stop loss as TP. News came out for USD, but we didn't have any reaction at all. So all in all, the trade was a fine trade for me because it met all my criterias, right? I want to see a fair value gap created in a very, very important POI for me. I want to see a bearish candle around that zone, a very heavy candle, and yeah, so we didn't get what we wanted. If I want to reset this right now, I can mark this high as a level of resistance, right? So I can clear this off my chart. I can also clear this support zone off my chart. Then I can as mark this right as my demand zone, and mark this as my supply zone. So now I would love to trade in this range. If price comes to this high and we have a bearish candle, then I can be planning to sell from here back to this zone, which would be more like a 35 pips. Stop loss above that demand zone, which is going to be like a 10 pip. So more like going for a 1 to 3. So if I get this, I'm okay. As long as I can milk the market of everything I know, and I can trade in a range, I'm okay with this. If not, if I get a sharp move, then I'll be looking out for this level here. So anyhow, I'll always update you guys on every trade I take. We missed a lot of trades on GBP pairs. Oh my god, these pairs were flying like they were going to break the roof, and oh Jesus. I actually missed a lot of entries on GPY pairs because I had my eyes on this fair value gap right here. As you can see, as I marked it to sell side liquidity previous day high. I marked it out. I was looking out for this, but I don't know how I missed it. I marked this fair value gap that okay, if price coming to, I still missed the move again. God, I was just so pissed today. I was pissed as hell. But it is what it is. you miss some trades, you gain some, and sometimes you won't make some money. So also, lastly, we have two trades currently running, which are AUDCHF. They haven't hit stop loss here, but I think NZDCHF should almost be at our stop loss TP, if I should put it that way. So when price wants to hit your stop loss as its TP. So yeah, so entry was around right here, right? That was our entry right there. 20 pip stop loss is right here. So hopefully we don't get stopped out. If we get, we are okay. If we don't, no problem. Anyone that happens, we we can't hold the market accountable for giving us losses. We only hold ourselves accountable for picking trades. Although this was in like a profit of 20 pips already. So yeah, that's all the trade for today. I hope you find this video insightful. Please click the link below. I always share my strategy. It's free because if my mentor ICT has his whole strategy for free on YouTube, why wouldn't I have mine on YouTube also free? So I learned it from him. I learned other strategies from a lot of people. Um, Personally, I love Kojo, Forex. I there are a lot of traders I actually look up to and follow up to when it comes to trading and when it comes to lifestyle. So um, I hope you find this video insightful, and please leave a like, subscribe, follow up. This is my journey, and this is my journey, my heart, and me pouring out myself to the market, explaining everything in details, telling you how I took my trades so far. This month, as you can see, we are currently down in trades, but I think in ROI we should be up currently. We should be up in ROI. Yeah. So we currently have 28 super soldiers on the group, and I'm happy for that. I love you all. Thank you for the support. As you can see, we have about 16 trades. We've lost about 16 trades this month. We have about 8 trades in profit. Our highest trade was Euro GBP, which gave us 1 to 5, Euro USD, which gave us 1 to 4, GBP USD, which gave us 1 to 4. You get to those massive ROIs are really covering up for our losses, and I'm happy for that, because when you have, it's not about how much you are making in the market, it's about how much you are able to lose. Because if these trades I was losing heavily on these trades, then I will not be able to be profitable at the end of the week, at the end of the month. You understand me? So please go to the group, subscribe, follow me on Instagram at best trading setups, follow me on Telegram, best trading setups, follow me on YouTube. If you get this video, please live positivity, live your life. Make sure you are following up your trades, you are journaling your trades, you are recording your trades, because find a means, even though it's opening a private Telegram group for yourself, making yourself know how you are taking your trades, because all this I'm posting are like more like my journals for me, letting me know where I'm wrong, what I'm saying, because I need to review a lot of things, my strategy and everything. And I'll keep you guys updated. Very soon we'll be taking a prop firm account. That will be a very big news to the community. We'll be taking a prop firm account, and we'll be planning to pass every stage of the prop firm account. So stay tuned for more trading content. Love you all. BTS out.